Quentin, the mortgage guy here. I had a phone call this week where somebody asked me, what makes you special? What makes Gateway special? And why should I be doing business with Gateway? And you know what? That was a great question. It really gave me some time to think about what does make us special and things like that. So I thought of no better way than just kind of giving you guys a breakdown of exactly what happens when you refer a file over to Gateway. This week, I received a phone call from a borrower that is under contract, referred to me from one of my realtors. They're purchasing a $300,000 house. It's their first-time home buyers. They've not bought a house before. And they're already pre-approved with another lender. We'll leave nameless at this point. So I wanted to kind of give you guys some visual aids on this. So take some time if you want to freeze frame it and take a look at this. Pretty good qualified couple, 720 credit score, buying a $300,000 house, not purchased before. They're offered a 7.5% interest rate on an FHA mortgage. That's 3.5% down. Pretty traditional in terms of what you're going to get if you're a first-time home buyer. And their savings, their lifetime savings that they have to put into this entire purchase is $15,462.34. So I was asked to compete for this, just put in a quote for an FHA loan and see if we can do better. So this is what we came up with, an apples to apples comparison of what the other lender is offering. We were able to get a better interest rate at 7.25%, just a traditional FHA loan. Total principal, interest, and mortgage insurance premium is $2,147.57. They're putting 3.5% down, and they also have an out-of-pocket expense of 3.5%, which happens to be $10,500, plus any closing costs, title fees, those types of things. For the most part, outside of lender fees, they're all going to be universal, regardless of what lender you're using. So their starting loan balance was going to be $294,000 and some change. And typically, if you're going to compete for a deal in the lending world, that's as far as it goes. I mean, we have the better interest rate. We obviously have the lower monthly payment. We're going to come in under cost from the other lender. So that's where it ends. We win the deal and we move forward. But when you send a deal to Gateway Mortgage, your borrowers are going to get a little bit more in detail analysis of what options are available to them. So the other thing that I looked at for these folks was actually a conventional home ready deal. So take a look at that real quick if you have a chance. You can see that the interest rate is actually lower. It comes in at 6.875. Principal, interest, mortgage insurance premium is actually $2,112.94. On top of that, rather than bringing the 3.5%, they can bring only 3% to the table, which saves them of their lifetime savings, $1,500. First-time home buyers, or really anyone for that matter, that's a pretty good deal. So now we're kind of getting closer to hero status. We've put together a better deal than what the competition has been able to put together. We're saving the borrowers money at the closing table. We're saving them money on a monthly basis. And there is no upfront mortgage insurance premium on a conventional loan. So they're saving over the lifetime because their starting loan balance is going to be significantly less. But there's more, okay? In addition to looking at the FHA and finding a better program for them in a conventional home ready product, there's also something that the other lender wasn't looking at called the USDA. Now this is significant, okay? Because not only are they getting a 6.75% interest rate, which is substantially lower than the interest rate that was offered by the other lender at 7.5% on an FHA loan, their mortgage insurance premium plus their principal and interest is $2,032. That's a lot less than the 7.5% FHA offer. But it gets a little bit better than that because their out-of-pocket expenses at closing, there is no down payment for a USDA loan. So it's going to be cost. It's not going to have any down payment. So of the $15,000 that they have set aside that they've saved on literally a lifetime, they're going to keep the bulk of that in their account. So for them, it's significant. For the buyers, it's significant. They have a lower monthly payment than the other lender offered them, and they have no down payment on the closing deal. So that's some of the power that we bring as a lender. We don't just compete with apples to apples We show your buyers literally every program that they qualify for. And that's the tip of the day. So don't ever hesitate to reach out to me for advice on any deals that you're working with and see if I can come up with a better deal for your buyers. Have a great weekend.